Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. If you've had your ear to the ground, you might have heard an increasing dint of concern around bubble-type dynamics around AI. And this has a lot to do with broader market things that are happening right now. SPACs are back on the table. Crypto treasury companies are all the rage. So there's a general sense, I think, of heatedness creeping into markets. And given how much AI drives a lot of market narratives, it's natural for it to get caught up. However, if there is one takeaway from this set of headlines, it's that bubble or not, AI is making a lot of money. Yesterday, Meta did their quarterly earnings and just absolutely crushed analyst expectations. They reported 22% revenue growth and $18 billion in quarterly income. And what they're going to do with all of that is very clear. The company reiterated plans to double infrastructure spending this year to reach up to $72 billion in CapEx. They forecast a similarly large increase next year, writing that they've decided to, quote, aggressively pursue opportunities to bring additional capacity online to meet the needs of artificial intelligence efforts and business operations. CFO Susan Lee noted that although external financing is being considered, Meta expects to fund most of the build-out from cash flows. Now, one of the things that's really important about this is that this is not just Meta doing well over here and doing AI over there. There is a direct connection. On the earnings call, Zuckerberg said that the ads business is already seeing a meaningful amount of revenue from new Gen AI features. And even more than that, overall, he said that the strong performance this quarter was largely thanks to, quote, AI unlocking greater efficiency and gains across their ad system. In other words, this is Meta's business doing better, not all of a sudden people showing back up on Facebook. Now, Bloomberg is still giving column space to analysts with concerns about AI investment, but you're seeing more and more qualifiers being added to the comments. Gabriela Santos, chief strategist for the Americas at JP Morgan Asset Management, said, if a company is saying, maybe we'll see an AI benefit in 5 years, we're no longer at the point where that will get a pass. Valuations are mattering more and more, and valuation especially matters if a company can't grow sales as fast as expected or as quickly as CapEx. And yet, that's the key difference for the hyperscalers this year. Sales are growing alongside CapEx, and most of these firms are seeing near immediate returns on their investment. Regardless, the market has spoken, with Meta surging 10% in after-hours trading. Wrote Google Cloud's Brian Beal, Meta can afford to hire as many billion-dollar people as they want to. Microsoft also gave a banger of an earnings call. Now, Microsoft was going to be one of the interesting AI companies to watch this quarter. Over the first half of the year, the narrative was that Microsoft was pulling back from excess cloud contracts, suggesting that demand projections were a little soft. Executives brushed off the rumors, explaining that a handful of canceled contracts were just volatility on the margins rather than a big strategy shift. Well, turns out there was absolutely nothing to worry about, as Microsoft delivered a huge outperformance to close their fiscal year. Company-wide revenue grew at 18% and income rose by 22%. Now, those are huge numbers on their own, but the even bigger news came from the Azure Cloud division, which was reported separately for the first time. Azure sales grew by 39% for the year to reach $75 billion. That's around a quarter of the company's overall revenue, and now within striking distance of AWS, which was a $112 billion business over the past year. Said CEO Satya Nadella, cloud and AI is the driving force of business transformation across every industry and sector. Microsoft saw an 8.5% move in overnight trading, enough to make it the second company in history to reach $4 trillion in market cap. Now, just for some comparison, the chart you're looking at is quarterly cloud revenue added, basically how much cloud revenue grew by each quarter. This past quarter saw Microsoft add more than twice as much as any previous quarter in history. Now, also as an aside, someone pointed out that if you're wondering if Apple's AI strategy is hurting it, looking at 12-month stock performance, and this is even before those overnight results, while Meta is up 50%, Alphabet is up 15%, Amazon is up 26%, and Microsoft is up 21%, Apple is down about 5%. So yes, the market is punishing Apple for, among other things, its lack of an AI strategy. And yet this whole money-making thing is not just in the public sector. With everyone talking recently about how fast Anthropic has been growing, sources have leaked OpenAI's revenue as well. The company has hit $12 billion in ARR, meaning they're on a $1 billion a month pace, which is up from $500 million at the end of last year. That's also a big jump from the last revenue check-in we had from OpenAI when they claimed $10 billion in ARR at the end of May. In addition, OpenAI said that they're now seeing 700 million weekly active ChatGPT users, up from 500 million in late March. That puts OpenAI on track to beat their revenue forecast from the beginning of the year. They had forecast $12.7 billion for the full year, so with 5 months left, they're comfortably on pace to blow out that estimate. Keep in mind that when those numbers first emerged, the prevailing take was that the forecast was somewhere between optimistic and delusional. OpenAI had one of the best years for any startup ever in 2024, bringing in $4 billion in revenue. Tripling from such a high base was basically unprecedented. But as we've seen, we are living in totally new times. On the other side of the balance sheet, OpenAI is also ramping up much faster than expected as well. They've increased their cash burn projection to roughly $8 billion this year, an increase of $1 billion. And yet, even with all of this, the story that a lot of the chattering class is talking about is Anthropic closing the gap. Saster points out that Anthropic is at 4x growth in 7 months, which actually I think the number is higher than that. I think it's actually 5x, versus OpenAI's 2x growth in that same period. The bottom line, they write, this is one of the most dramatic catch-up stories in enterprise software history. Anthropic has closed a 20x revenue gap to 2x in just 3 years, growing 10 times faster than OpenAI. While OpenAI maintains leadership through consumer scale, Anthropic's enterprise-first strategy and superior growth velocity suggest the revenue race will be incredibly tight by 2026 to 2027. Also, they point out, the market is clearly big enough for multiple $10 billion plus AI revenue players. Now, we barely scratched the surface on what the actual revenue profile is going to be, but I think that the thing here is, yes, the catch-up story is impressive on Anthropic's part, but what it's come from is not them out-competing OpenAI on things that OpenAI was already leading in. It's them carving out the central place in the biggest growth area, which is agentic coding. This massive inflection point that has happened over just the last couple of months is being driven in large part by the massive expansion of coding use cases, and currently Anthropic is really leading that pack. And this is what makes the stakes of the GPT-5 release incredibly high. Now, we're still getting rumors left and right about this. Yuchen Jin writes, heard from a little bird at OpenAI, GPT-5 is finally better than Claude at coding, not just on benchmarks, but in real internal use over the past few days. If that's true, Anthropic can't stay quiet for too long. Claude 5 has to be released sooner. We'll see. For a lot of developers right now, the devotion to Claude is very, very high. But this battle is far from over. It is certainly something we will be watching. For now, though, that's going to do it for today's AI Daily Brief Headlines Edition. Next up, the main episode.